Welcome back to The Crypto Strategist, everyone, the channel where we break down the biggest developments in crypto, blockchain, and global finance in a way that actually makes sense. Today's headline may sound unbelievable at first, but stay with me because the next major move for XRP may not come from a price chart, a technical breakout, or even a courtroom decision. It may come directly from Washington. There is a congressional proposal gaining attention that could have enormous implications for XRP and the broader digital asset market. If the proposal moves forward, it could establish a federal digital asset stockpile that includes non-Bitcoin digital assets, with XRP being one of the names frequently discussed in connection with the idea. And if that happens, we could be looking at one of the most important moments in XRP's history. Before we dive in, I want to hear from you. Had you heard about this development before today? Drop a yes or no in the comments. I am genuinely curious how many XRP holders have come across this story because, surprisingly, it is not getting the mainstream attention many believe it deserves. As always, this is not financial advice. This content is for educational and informational purposes only. Make sure you do your own research before making any investment decisions. What makes this story so interesting is not simply the possibility of government involvement. It is the structure being discussed. The proposal centers around the concept of a digital asset stockpile, essentially a government-managed reserve designed to hold and safeguard digital assets under strict oversight. Unlike casual references to crypto holdings, this framework would reportedly require formal custody standards, reserve verification, and transparent accounting procedures. Those details matter. In traditional finance, institutions place tremendous value on verified ownership, audited reserves, and clear custody chains. These are the foundations of trust in large-scale capital markets. If digital assets such as XRP were ever held under a system that met those standards, it would represent a level of legitimacy that many institutional investors have been waiting to see. For years, critics argued that crypto lacked the infrastructure necessary for serious institutional participation. A federally documented holding framework would challenge that narrative in a significant way. That is why so many analysts are paying close attention to the language being discussed around this proposal. Now think about this from the perspective of major financial institutions. Pension funds, sovereign wealth funds, large banks, insurance companies, and asset managers do not make decisions based on social media excitement. They do not buy because a hashtag is trending or because a YouTube thumbnail promises life-changing gains. These organizations move slowly and carefully. They rely on documented signals, regulatory clarity, and verifiable frameworks. When governments formally recognize an asset class through legislation or strategic initiatives, institutional investors often take notice. That does not mean money floods in overnight, but it does mean the conversation changes. The asset is no longer viewed as a speculative experiment operating outside the system. Instead, it becomes something that regulators, policymakers, and financial leaders are actively evaluating. For XRP holders who have spent years hearing criticism from traditional finance circles, the possibility of this type of recognition is exactly why many are paying such close attention to developments in Washington right now. To fully understand why this conversation is happening now, we need to zoom out and look at the global picture. The United States does not make strategic financial decisions in a vacuum. Major policy moves are often influenced by international competition, technological shifts, and changing economic realities. Around the world, governments and central banks are exploring new payment systems designed to improve cross-border transactions. One of the most discussed projects is a platform known as mBridge, which has been associated with efforts to create more efficient international settlement systems using blockchain technology. The significance of these developments goes far beyond crypto enthusiasts. Global payment infrastructure influences trade, currency demand, and economic influence. For decades, the US dollar has occupied a dominant position in global commerce. Any alternative system capable of reducing dependence on traditional dollar-based pathways naturally attracts attention from policymakers. That broader context helps explain why digital asset infrastructure is becoming an increasingly important topic in Washington and other financial capitals around the world. For many viewers, international payment systems might sound like a distant issue that has nothing to do with their daily lives. But the reality is very different. The strength of the global financial system influences everything from retirement savings to borrowing costs, purchasing power, and economic growth. When policymakers discuss digital assets, they are not simply talking about technology. They are talking about competitiveness. They are talking about maintaining influence in a rapidly changing financial landscape. The reason XRP often enters these conversations is because of its long-standing focus on cross-border payments and settlement efficiency. Ripple spent years building relationships with financial institutions, payment providers, and regulators around the world. Whether someone is bullish or bearish on XRP, it is difficult to deny that Ripple positioned itself differently from many crypto projects. Instead of targeting retail speculation alone, it consistently pursued institutional adoption and enterprise partnerships. That strategy is one reason XRP continues appearing in discussions involving the future of financial infrastructure. Another major piece of this story involves stablecoins. Over the last few years, stablecoins have evolved from a niche crypto product into one of the fastest-growing segments of digital finance. Policymakers increasingly view dollar-backed stablecoins as a tool that could extend the reach of the US dollar into the digital economy. The logic is straightforward. When stablecoins are backed by US Treasury assets, growing adoption can create additional demand for those assets while helping facilitate digital transactions globally. This is one reason stablecoin regulation has become such a major focus in Washington. Regulatory frameworks are being discussed because lawmakers understand that digital finance is no longer a theoretical concept. It is becoming a real part of the global financial system. As this transformation continues, infrastructure providers capable of supporting stablecoin activity stand to play an increasingly important role. That is where XRP Ledger and Ripple's broader ecosystem frequently enter the conversation. One development that has attracted significant attention is RLUSD, Ripple's dollar-backed stablecoin initiative. Unlike theoretical concepts that exist only in presentations and white papers, RLUSD represents a live product operating within Ripple's ecosystem. Supporters argue that it demonstrates how traditional finance and blockchain technology can work together rather than compete against one another. The importance of RLUSD is not simply its current size, it is what it represents. It shows how digital dollars can move through blockchain infrastructure while remaining connected to regulated financial frameworks. Many observers believe that successful stablecoin growth could help accelerate broader adoption of blockchain-based payment systems. For XRP supporters, this matters because the more activity that develops around Ripple's ecosystem, the more attention is drawn to the infrastructure supporting it. While there are certainly competing projects in the market, the growth of Ripple's stablecoin strategy has become one of the most closely watched developments in the digital asset industry. What often gets overlooked is how much work takes place behind the scenes before institutional adoption becomes visible to the public. People tend to focus on headlines, price movements, and social media debates. Institutions focus on compliance, risk management, infrastructure testing, and regulatory engagement. These processes can take years. Ripple has spent a considerable amount of time building relationships with banks, financial firms, payment providers, and regulators. Whether someone agrees with every aspect of the company's strategy or not, those efforts have positioned Ripple differently from many blockchain projects. Institutional trust is not built overnight. It requires documentation, audits, legal reviews, and extensive due diligence. That is why some investors believe the current developments surrounding XRP are the result of groundwork laid over many years rather than sudden market excitement. The pieces being discussed today did not appear overnight. They are part of a much larger and longer story. At the same time, activity on the XRP ledger continues to attract attention from analysts monitoring adoption trends. One of the most important indicators in any financial network is not just size, but growth. Early-stage infrastructure often starts small compared to established competitors. What matters is whether usage is accelerating. Supporters of Ripple point to expanding ecosystem activity, increasing interest in blockchain-based payments, and growing institutional engagement as evidence that momentum is building. Critics argue that adoption still has a long way to go before it reaches the scale needed to justify some of the more ambitious price predictions circulating online. Both perspectives are important to consider. However, when evaluating infrastructure projects, growth rates often provide valuable insight into future potential. Markets frequently pay attention not only to where a network stands today, but also to the direction in which it is moving. Another topic that has generated enormous discussion is the possibility of deeper integration between blockchain infrastructure and the traditional banking system. Some analysts have speculated about scenarios where Ripple gains greater access to core financial settlement mechanisms. Discussions involving Federal Reserve infrastructure have become particularly interesting because they touch on questions of legitimacy and institutional acceptance. To be clear, much of this remains the subject of analysis and speculation rather than confirmed outcomes. However, the reason these conversations matter is because they highlight a broader trend. The line separating traditional finance from digital finance continues to blur. What once seemed like two completely separate worlds increasingly appears to be moving toward integration. If that trend continues, companies and networks already focused on institutional relationships may find themselves in a stronger position than many people expected just a few years ago. One of the most fascinating arguments surrounding XRP comes from discussions about the future of global reserve assets and international settlement. Throughout history, dominant financial systems have evolved. Economic leadership has shifted between nations, and global trade networks have changed over time. Some analysts argue that the modern world faces a unique challenge because major powers often view one another as strategic competitors. In that environment, a neutral settlement asset becomes an intriguing concept. The argument is not necessarily that any specific digital asset will become a global reserve currency. Rather, it is that a neutral bridge asset could help facilitate transactions between parties that do not want to depend entirely on another nation's monetary system. This is one of the reasons XRP supporters often emphasize its design as a bridge asset. Whether that vision ultimately becomes reality remains uncertain, but it is a perspective that continues to attract attention in policy and financial discussions. David Schwartz and other figures associated with Ripple have frequently discussed these broader structural themes. Their arguments often focus less on short-term market fluctuations and more on long-term economic incentives. If nations become increasingly reluctant to rely exclusively on rival powers for settlement infrastructure, demand could emerge for systems that operate outside direct government control. Supporters believe XRP's characteristics make it a candidate for that role. Critics, of course, point out that many digital assets claim similar advantages and that adoption is never guaranteed. The truth likely lies somewhere between extreme optimism and extreme skepticism. What cannot be ignored, however, is that the conversation itself has become more serious. Topics once dismissed as speculative are now being examined by policymakers, economists, and institutional investors. That shift alone represents a meaningful change from where the industry stood only a few years ago. When you connect all of these developments together, a larger narrative begins to emerge. On one side, global payment infrastructure is evolving. On another side, stablecoin regulation is advancing. At the same time, blockchain networks are competing to become foundational layers of future financial systems. Then we have discussions in Washington about digital asset reserves and government frameworks for custody and oversight. Viewed individually, each story is interesting. Viewed together, they suggest that digital assets are gradually moving closer to the center of financial policy discussions. This does not guarantee success for XRP or any other project. But it does mean the environment today looks very different from the environment that existed during earlier stages of the crypto industry. The conversation is becoming more sophisticated, more institutional, and more closely connected to real-world economic priorities. For longtime XRP holders, this evolution is particularly significant. Many people in the XRP community remained committed through regulatory uncertainty, legal battles, market volatility, and periods when mainstream attention disappeared entirely. During those years, supporters consistently argued that institutional adoption would eventually matter more than short-term price action. Whether that thesis ultimately proves correct remains to be seen, but recent developments have certainly provided new material for discussion. Legislative proposals, stablecoin initiatives, payment infrastructure projects, and institutional partnerships all contribute to a picture that looks increasingly complex and interconnected. For investors who have followed XRP for years, the current environment feels very different from previous market cycles, because the conversation is no longer focused solely on speculation. It is increasingly focused on infrastructure and utility. Of course, it is important to remain realistic. Congressional proposals do not automatically become law. Regulatory frameworks take time to develop. Institutional adoption rarely happens as quickly as retail investors would like. Large-scale financial transformations often unfold over many years rather than a few months. That means patience remains essential. Some of the most significant changes in financial history occurred gradually before suddenly becoming obvious in hindsight. The same could prove true for blockchain technology and digital assets. While headlines often focus on immediate price movements, the bigger story may involve the slow integration of digital infrastructure into the broader financial system. Those are the developments that many analysts believe deserve the closest attention right now. The reason this story has generated so much excitement is because multiple trends appear to be moving in the same direction simultaneously. Policymakers are discussing digital assets more seriously. Stablecoin frameworks are advancing. Institutional participation continues to grow. Global payment networks are evolving. and XRP remains connected to many of these conversations through Ripple's long-term focus on financial infrastructure. Whether you are bullish, bearish, or somewhere in between, it is difficult to deny that the landscape is changing. The debate is no longer about whether blockchain technology exists. The debate is about how it will be integrated into existing financial systems and which networks will benefit the most from that transition. So here is the big question. Are these developments isolated events, or are they all part of a much larger transformation taking place beneath the surface of the global financial system? That is the question investors should be asking right now. If a federal digital asset stockpile eventually becomes reality, if stablecoin adoption continues accelerating, and if blockchain-based settlement infrastructure keeps expanding, the implications could be enormous for the entire industry. The timeline remains uncertain and nothing is guaranteed, but the direction of travel is becoming increasingly visible. That is why so many people are watching these developments closely. As always, I want to hear your thoughts. What do you think is the most underreported part of this entire XRP story? Let me know in the comments below. If you enjoyed this breakdown, make sure to like the video,